a good group this morning. So I'm going to share with you guys, hopefully this isn't the first time that you've seen it, but the exam topics. All right, so let's just take a walk through what we've got here. In chapter 10, must be familiar with the ratios that are covered in the chapter. Gave you a list of them. The formulas will be provided, but you must know how to do the calculations. And then using an average in the denominator where applicable. And where applicable, when it's a measure of income in the numerator and a measure of capital I.E, total assets, current assets, total equity, I don't know why there's that. All right.
Where can I find this document on Blackboard?
A question. Let's see if I know what I'm doing. I haven't been drinking as much this week, so might actually remember that.
You and me both.
I had to do a little stewing on Monday. Stew and move on. It's life. Okay. So course materials. And then you have, remember, your PowerPoint files, your chapter note guides, your in-class questions, your solutions, and then it should be in exam study info, exam study to right. The annotations that are on there that I'm making now are not on there, but I'll upload it over this one when I'm done with class. All right. I didn't go too fast there, did I?
No, you're all good.
Sweet. All right.
Thanks.
You're welcome. I think that was the right way to do it. Okay. Okay, so that's it for chapter 10. You've got that list of ratios. The ratios are going to be on the test, so you'll have them available for you. one of the things that we're going to do different for this test is that you only be presented one question at a time. And so I've got to work to make sure that the ratios show up in each one. Right. But if you do have that paper that I handed out to you with the ratios, you are welcome to use that one. All right. Now, it says the only topic covered in this chapter is bad debts expense. And don't get lulled to sleep by that, because bad debts expense is pretty challenging. You've got to remember that you've got several different parts to it. So initially there's an entry and an estimate based on either your sales or your aging or a percentage of your accounts receivable. And it allows it, GAAP requires the allowance method. So essentially when you're doing this, you're putting the bad debts expense in, but you're also creating an allowance for doubtful accounts. So entry for the allowance. In retained earnings. By the way, we think we have a case in the house here, and I have 8 people here living with me. So next week's gonna be fun. And then and that's in the asset side, it reduces is a contra account. Accounts receivable. Okay. Always keep the principles in mind. You have the matching principle. Revenues and expenses should be matched. Don't get too caught up about the tax code. Note that it requires a direct write-off method. I'm guessing there's a little typo. Sure. How to record a sale on account. And then do the bad debts adjusting entry with the estimate based on percentage of net credit sales. So if we sold $1 million, a little punchy, I didn't sleep much last night. And estimate. Oh, gotta remember the important part, on credit. And estimate 4% bad debts. You just take 4% of net sales. So keep in mind that they may return some, they may not. And so I think this would be 40,000. check my math on that. 40,000 would be a bad debts expense. And 40,000 an allowance for don't pull.
Professor, I just had a question about this. So the bad debts expense would be in reduction in retained earnings, but
Yep.
would that be also recorded as a reduction in the allowance since you start with an allowance and then you use some up based on the bad debts expense?
No, so you're in this step, you're just creating it, so it's still negative. When you find out if somebody does in fact have or fail to pay their bills, then, and you have to write it off, then that would come about.
All right, thank you.
So I'll try to answer that a little better. Okay. So this one says a percentage of receivables. The next one. All questions based on percentage of receivables assume that there's a zero prior balance in the allowance account. Okay. Yeah, see, this is where I talked about the one in class and I made the mistake because the textbook delivers it as if there's no balance and doesn't make mention of it. So this is the example in class when they say, okay, receivables after checking the aging schedule.
Wait, Professor, I'm confused. Are you still doing the 30,000 with the 1 million? Are you still?
No, different example. So let's do this. Make it a little more clear. Thank you. Example 1, percentage of net credit sales. And then example 2, but after checking the aging schedule, it appears 5,000 will not be paid. And so you'd have 5,000 bad debts expense. And 5,000 allowance for doubtful accounts. Okay, so that would be one part of the second one. The other part would be so that sometimes they make estimates and say, okay, so same thing here. Same amount. 2%. Bad debts. Shouldn't say are, should say will be. So then you just multiply the 30,000 by the 2%. 3,300. It's like 600, I think.
Isn't example 2 under, well, the second example under example 2, isn't that the same thing as kind of doing the percentage of net credit sales?
So here, we go all the way across the board. And Chris asked a pretty good question, and I think you even followed up on it in class, is that I make this initial example 1 at the time of sale. But then when I get down to the balance and what's left over and hasn't been collected yet, shouldn't I be taking it off of that? And so essentially, example 1 is taken right at the time of the sale, whereas example 2 allows you to assess better still within the period, but you can see some of who paid. So it's not the same, because you, in this example, you probably sold $1 million. But that's, say, at the beginning of the period, and example 2 would be what you're left at the end of the period.
Okay. All right. I got it. Thank you.
Because these are accounts receivable balance.
Okay. Thank you.
When it says percentage of receivables, means percentage of ending period ending AR balance.
So just to clarify, in example 2 on the first one under that, you'd write the 5,000, the minus 5,000 in bad debts expense and retained earnings, and then you'd write also a minus $5,000 in the contra assets account for the allowance of doubtful accounts.
Correct. Under assets. This one's retained earnings. And this one goes in assets. Usually we have other assets, but if you have AR, there you have AR. And so 30,000 times 2%. I think that's 600. So you'd have $600 bad debts expense and retained earnings, and if you don't remember what an aging schedule is, does everybody remember what an aging schedule is? Let me
No.
throw out the poll.
Yeah, can you go over that again?
If you don't remember what an aging schedule is, click on the no. If you do remember, click yes. If you do remember, once I start to go over it, you can just hum the Jeopardy theme in your head quietly. Okay. All right. So I'm going to go back to the sheet here. I'm going to close this out. A few of you remember, that's good. Okay. So I'm just going to take a generic table I'm going to insert in here. Okay. So across your top row is essentially your days. And you'll have 0 to 29, 30 to 60, 61 to 90, 91 to 120, 121 to 150, 151 to 180, and then 181 to 210, and then 211 and greater. And what you do is you assess the likelihood, or let's call it just the percent not expected to be paid. Let's see if I can shorten all these.
I think you have to just make your font smaller.
I'm a little too insecure to make my font smaller. Nothing. Bueller. No, my problem would be I can't see it. But that would have worked, by the way, Dylan. Okay. And so in the 0 to 29 bucket, you'd assume everybody's going to pay that. So we'd say, okay, this one's 0%. And this one, we're still fairly low. We're not going to worry about this one. We say this one's 0%. Let's say we're a doctor's office. We go through billing here. We want to start to think about it. If they're not getting paid, then, and then we want to go out from here, 2%. And then, you know, we start to get now where you're close to half a year. You're not quite there. Now you get to almost a half a year. And then maybe once it gets over a half a year, they know many of those don't pay. And once they get here, they know 99% doesn't pay. And so you have customer and they've got, you know, $10,000 in this bucket. Customer B's got $10,000 in this bucket. C has 2,000 out here. D. Okay. And so what you would do is just kind of multiply them to get these percentages. So and you'd go through and say, okay, in this case, 0. In this case, 0. Zero here, you'd take 2% of 10,000, so I think that's 200. We have nothing in that quarter category. 0, 0 here, 1,000, and then nothing in that final category. So the way your receivables would be, it'd be would be the 50, the 10, the 10, and the 2,000. So it'd be 72,000. And your allowance for doubtful accounts would be 1,200. And so your AR net would be 70,800. Okay. Any questions there?
So just to clarify, the numbers, well, like the customers of what they owe, is that basically when they last made that purchase, or like how long ago they made the purchase and haven't paid it?
Correct. So you'd go somewhere in here to 0 to 29 days ago, this purchase was made. Somewhere 30, 60 days, this purchase was made. Somewhere 91 to 120, this purchase was made. And my numbers may not be realistic based on any business, but what I wanted to get across is that you should see escalating percentages as you go out, depending on your business. And, you know, I know because I'm divorced that oftentimes the coordination of the two insurances for my son's dental will take 6 months. And, you know, they always get paid, but it takes a while. And whoever's the first, it usually gets paid in this 20 to 60 day range. And then the other one goes, am I supposed to pay that? And they go, oh, well, we'll get around to it. And then it gets out here into this category. So there are some businesses that reflect this, but you have to look at your own business and determine what's appropriate. But that's an aging schedule.
And then would you put 70,800 in retained earnings?
No, all that stuff is done before. The only thing we would do after this is that we would make our entry. Just want to space it a little bit off there. So as a result of the aging, you'd make an entry of 1,200 to allowance for doubtful accounts. And for bad debt expense. Because remember, you've already recorded these sales and receivables. Any other questions there?
Where are you getting the 72,000 again?
I added up what was in here.
Oh, okay.
And you can imagine this on a massive scale. The computer will already do it. You think about a company like GE with thousands of vendors. And this is where it's important, 0 prior balance in the allowance. And you won't be tested on how to write off an actual account or how to restore collected or previous.
So for that with the assuming 0 in prior balance, we would just basically do what you did with when you subtracted the doubtful accounts from the accounts receivable, since we're assuming there's 0 allowance prior.
Correct. Correct. One of the things that, the text kind of goes through and I didn't catch it initially is that if the doubtful accounts had a balance of 500 or negative 500, then I would have to adjust that and this would have been 700, but you don't have to worry about that. Okay. All right, and then on the 5, students will need to know how to record the sale on account where cash discount terms are offered using the gross method where the discount is ignored on the date of the sale, and then how to record the payment within the discount period and after the discount period. The net method will not be tested. I'll highlight that. The income statement presentation of sales, net sales, assuming they're both sales discounts and sales returns and allowances. And the classification of sales discounts and sales return allowances as contra sales accounts on the income statement. And then students need to understand that inventory is a current asset and be able to calculate the cost of goods sold and ending inventory under LIFO, FIFO, weighted average. And this is important under a periodic inventory system. So that's going to be a lot easier than a perpetual inventory system, because even if you get some sales before we got all the batches in, you're not as worried about timing, because under the periodic system, we treat everything in kind of a pool at the end. And then calculations used under perpetual system will not be tested. Okay. Also need to know that LIFO is prohibited under IFRS and why the method doesn't parallel the actual physical flow of inventory in many cases. So we all know what IFRS is, right? That's International Financial Reporting Standards.
Does LIFO still fall under GAAP?
Yes. And then just the general rule that we talked about. If they're is inflation. LIFO will produce the highest cost of goods sold, which inflation is typically what we expect. Rarely do we experience an event like we're experiencing now. But if you've been paying attention to oil over your lifetime, if you're dealing with oil, then you've seen some deflation. And so since it produces all of those things, lowest gross profit, lowest net income, lowest taxable income, and then expense, and tax purposes. And I'm pretty sure the rule still stands that if you use it for tax purposes, you have to use it for financial purposes as well. But there has to be a reconciliation back to FIFO. So you present it as LIFO, and then you present a reconciliation to FIFO in your notes. And that's all I got for you today. If you have questions, homework questions, class quiz questions, it's your time.
Can you go over like the format of the test? Is it the same as last time?
No, because we don't have the ability to do paper. So it'll be 25 multiple choice questions. You'll
Okay.
have, I'll give you a few minutes to get settled, but it'll be like standard class time. So I'll probably set it up like 53 minutes. The one thing that'll be different is that the system will present one question at a time. You'll still be able to backtrack. So if you don't like a question, you can skip it, but it won't do all of them at the same time. But it'll be exactly like the other test.
Okay, cool. Thank you.
You're welcome, Emily.
And do we have to log into Zoom on that day or no?
No, because the Respondus browser is going to take over your computer and it won't let any other programs run. I would suggest having my cell phone number programmed into your phone. So if you run into an error, you can call me on questions. You know, just do the best that you can, because your questions are going to be randomized. And if you try to call me and ask me about a specific question, it's going to be difficult for me to find. You keep a little piece of paper there and note. So if there is a legit problem, you know, we can go back and make sure you get credit for it. But, you know, call me if there's a crash or something that doesn't make complete sense at all.
What would you recommend studying? Like, would you rather like have a study a lot of the quiz questions, the things that we did in classes, that kind of stuff? Or like, what do you think?
Well, I would start with this. This is your study guide.
Mm-hmm.
And so you've got to make sure that you're
You
familiar with this. I wouldn't go crazy trying to memorize the, for chapter 10, memorize the ratios, because they're going to be given to you, but it would be worth it to take some time and look at them, you know, and say, okay, how do I plug what into where, and just feel comfortable about that, so you're not the day of going in blind. Doesn't like either presentation.
And the questions that we did, like that we didn't do, that were on the in-class assignments, they're not going to be on the test, right?
No, those are actually ones that could potentially be on the test.
Okay.
I just have a limited amount of class time, and I'm
Right.
hoping that you guys will say, okay, he did this example. I can do this one as a practice, and it'll help reinforce for some people who don't have super memories. Are there any specific questions?
I actually have a question on the homework.
Okay.
It was chapter 5, quiz 2.
I will pull it up so you guys can see it in a second. I'm gonna get to that little pop-up screen. All right, I'm about to share it with you. Okay. All right, chapter 5, quiz 2. Open up the screen. I have to deal with a window you can't see. I'm gonna squish it up on the bottom and then slide it up top. Okay. Click on the icon for the additional information. So this is a question that says the movie projectors, so it's similar to what we did in class the other day, except for this is LIFO.
Yeah.
So let me just make sure the units are, we've got, they had 3 in inventory and they purchased 8. And then they sold 5, 2, and 3, so 10. All right. And so it's asking for the first part, determine LIFO, cost of goods sold. And since it's last in, first out, your batches from the beginning, you're going to have 1 left over. So you have 2, 350 from the August 11th purchase. We purchased 4.
Hey, that was my question. Why is it 2 units again? Sorry. Why is it 2 units again? That was a question I had.
Hey, give me 1 second. I'll show you. Units from the 14th, we purchased 3 units there at $375. And then the last one, we purchased 1 unit at $380. So with LIFO, last in, first out, the last one you bought is the first one to be sold. All right. So if I'm counting, I've got 1 because that's that complete batch. And then the complete batch from the 14th. And so that's 2, 3, 4. And then the next batch has 4. So we're at 8. And I know I sold 10. So I need 2 from the beginning inventory. The easier way to think of it is you've sold 10, you have 11. The very first one you got is the one that's not being sold. That might work for you, might not. So you'd have to multiply those out. And then down here, the only thing you'd have is the one at 350. So that would be 350. The rest would be all zeros except for the cost category.
Thank you.
You're welcome.
Where does it say you purchased 10?
Can you guys see the little box?
Yeah.
Okay, so it doesn't say 10. It says you started with 3 and purchased 8.
Oh, okay.
So it says purchased 4 units at 400 on August 11th, and then purchased 3 units at 375 on the 14th. So that's 7, and then this one is 8.
Mhm.
The 10 came from the sales. So we sold 5 units on the 13th. We sold 2 units on the 18th, and then we sold 3 units at 425. So that's the 10. Oh, excuse me. No coffee yet.
And I don't know if it works with this problem, but are you able to like quickly show how it changes when you're in the first in, first out?
I mean, I could show you if it was first in, first out. All you would do is take this one off and add that beginning one here.
All right, fair. And then on the bottom, there'd be
Down here, that one would move
to the bottom. All right.
to the bottom. And it would be the 380. And in this switching from FIFO to LIFO, remember, you're going to have an ending inventory and a cost of goods sold. That's going to add up to your total inventory available. So what you had plus what you purchased is your cost of goods available for sale. Your cost of goods available for sale is going to be split into 2 parts. Cost of goods sold, ending inventory. So when FIFO is $20,000 higher, it's $20,000 higher than LIFO. You have to let go of the button and it'll give you a reading. It's not working? The laser's not working. Yeah, it seems to be working. Well, it's cold in here and my skin temperature is going to be 88 degrees.
That did not look good.
It's not. Our nephew is downstairs in the basement. Wife's geared up and going to check on him. He delivers for Amazon, so once he gets back to work, you can get it in a day or less. Not to make light of the situation. So how can I help you guys further? Technically class is over, but I have office hours, so.
Where's the test going to be posted on Blackboard?
You'll have to go in through your Respondus browser.
Okay.
So let me share my screen. So you'll go in on your, I think that's the wrong one. It's a lockdown browser. I don't know if I've got the icon. I think mine is slightly different than yours.
Okay.
Yeah, that's the 4.0. That's not it. It looks like a lock. Oh, it's right above it. There you go. It'll take you to this setting and it'll tell you I've got to close these programs. So that's why you can't be on Zoom during it. So I'm going to tell it no so that it doesn't close us out. But you'll bring that up. It'll say make sure you have all the windows closed, and then it'll pull up for you, but it looks like that.
Okay, thank you.
You're welcome. No, the password won't be the same. I'll put a new password out, and I'll send that out about 10 minutes before the exam via email and announcement. Remember, you got to have Blackboard closed. That was one of the technical issues. Also, if you've been using Lockdown Browser for a while, one of my classes experienced, or one of my students in my class and talking to other faculty, they experienced it well. If they were in high school and using it, and then they brought that same computer, it would work fine, but it would say it's out of date. So make sure that your install is new, not over a year old. So the question is, what did I mean when some materials won't be tested? I can't elaborate further on there. You just have to take a look at that sheet, and it will give you the closest thing I can to telling you what's on the test and what's not going to be on the test. You all are free to go or free to ask questions.
You have office hours today from 1 to 2, right? Also?
Yes.
Okay, perfect. Thank you.
You're welcome. You're welcome. What? Oh, you would like some class time? Do you want to teach? Oh, no, don't get me. Don't get me. No. Thank you. Yes, I will update this in Blackboard.
Can you do the same thing you did for quiz 1 like you did on the second one?
Help me understand that question a little
Like,
better.
you know how you just went over like the second quiz?
Yep.
Can you do the same thing for the first one?
Oh, absolutely. Let me throw this up in Blackboard. First. I kind of did it in answer to Kush's question, but I'll address it for you. I don't know where I saved it.
Professor, when does your office hours end?
Today I have class from noon to 1, and then usually I take like a 10-minute, 15-minute break, and then I go from 1:15 to 2 o'clock.
Okay. All right. Thank you.
You're welcome. No barking at the neighbors. Okay, so let me make sure I'm sharing the right thing. You said number 1?
Yeah.
Okay. Stop being a pain. My little dog is on my lap here shaking. She wants to bark at the people going by. Here, say hi, Zozo.
Outside?
I live on kind of a main street,
Oh, all right.
and there's a kind of businesses on both sides of me.
Yeah. Oh, they're not shut down yet?
For the most part, they are, but some of them are like there's a CVS,
All right.
like a stone's throw on one side, and a gas station that's a stone's throw. It's a little
Yeah.
bit longer walk back the other way, but most of the businesses are shut down.
Yeah, that's where it is back here.
Where are you?
Northern Mass.
Okay.
So it's like everything is like pretty much shut down,
Yeah.
except for grocery stores and like CVS and stuff.
Yeah. So you're going to get something similar to this. I think your numbers are even going to be the same. And so this is first in, first out. So you're going to sell the first ones that you got, 3, 4, and 3, and you're not going to sell any of the last one. 350, 400, and 375.
Why would it be a 0 on August 26th?
380 because you still have it in inventory.
Okay.
You purchased 1 unit at 380, but it's not part of the cost of goods sold. If you had sold it, then you put it in. But because you didn't sell it, it's part of the cost of inventory. So it goes in here in the second part.
Oh.
And then these would all be 0. Then you'd have to put your numbers in and multiply them through.
Yeah.
Anything else I can answer for you, Mr. Jacob?
I think that's it for now.
All right. Well, I will be around.
All right. Great. Thank you.
You're welcome.